Yo, what's good everyone? Welcome back to the Inner Wealth YouTube channel. And today we're going to be diving into the futures market. It's nothing too different than what we've already been studying. It's just there's diversifying after this week's experience. And if you don't know what I'm talking about, review my previous video about slippage, and then you'll know exactly why I'm dabbling now into the futures market. I want to be very clear. The futures market is not very different from margin trading. The assets are basically very identical, and if you're in the United States, I encourage you dabble in the futures market. I don't believe that it's available in all countries, and also I believe that the futures market is very similar to the Dow Jones, the US 30 that we were looking at, the NAS 100 and the S&P 500. And I don't know the exact definition of the futures market. I will leave that up to you to study. But today we're going to be looking and going over Dow Jones. Okay. And so if you ever want to access this, just type YM on TradingView right here, and then you will start pulling up all the futures. You can go filter and start pulling up all the futures markets that are available here. And so this is Dow Jones. Okay, it may look very similar because it is. Okay, and so we're going to be diving into and doing a full breakdown on this week's price action. Okay, now up until this coming week, we've had a lot of compressed price action. We were building up liquidity both on the upside and the downside. Okay. Here on the daily, you guys can see that the previous week we were just wicking back and forth within this previous range. From this high to this low, we were just within this previous range the whole week. If you watch my previous recordings, then you'll know that I've been pretty bearish on Dow Jones for a while. I do consider this a nice push to the downside. Okay, we didn't have an exact break here on the weekly. As you guys can see, we've been respecting this order block here. Okay, but here on the daily, we did distribute very nicely. We got a nice higher high, higher low, higher high right here. Then we find ourselves with a nice breaker structure here. Okay, so after we got this distribution here, my eyes really went to this order block here, and not just that, but the rejection block itself. Now if you don't know what rejection block is, it is the closure of the last up close candle before that big expansion to the downside, before that breaker structure. So it is the extremities and only the bodies. So my eyes went to this excuse me, my eyes did go to this order block specifically for level of resistance, and you can see that we've been ranging in here for quite a while. Finally we're getting some slight distribution, but really what the incentive for this week was mainly taking out all of this liquidity that was built up over the last few weeks there. And you guys can see that on Tuesday during CPI, we did get that nice sweep of liquidity and sweep of those previous weekly highs. Okay, and that test of our resistance level. Okay, Monday was actually a beautiful day. Personally did not participate, or I did participate on Monday actually, on some longs. Okay, and you guys can see here like beautiful price action. Okay, so here on the 4 hour, on the daily, you guys can see very clearly that we had swept all of this liquidity to the downside, all of that liquidity. Okay, so that's the lowest point. I'm going to mark that, but we have this low, all of these lows that got taken out. So 3 major lows on a daily perspective. And after we sweep major liquidity, what do I look for is a nice breaker structure, and that creates an insufficiency. Okay, so coming into the new week, we did get that breaker structure on the previous Friday, and Monday comes into that insufficiency. very nicely after we sweep that liquidity and then just start rallying up. So Monday, my main objective for Monday was to get back down into this area here, but honestly, I personally don't like trading Asian session. So Asian session is from the opening price all the way to midnight right there, and all of this to me is Asian price action and needed to get swept. So I don't like mitigations out of Asian price action. I don't look for them. So that's why I wasn't really looking down here, and I was okay with how the plate ended up actually playing out. So notice, same thing happens. We get a nice dip into that level of support, just like we did here. Come into a level of support. Market finds support here in this 4-hour imbalance, and then breaks structure here on the 1 hour and creates multiple insufficiencies. Okay, now if I'm not going to be looking for mitigations out of Asian, then this insufficiency got ruled out. Okay. If we did come this low, I would want it to just sweep the Asian low period, right? And come back into this 4-hour imbalance. Okay, but here on this whole up range before the open, we did get a nice insufficiency on the 1 hour. Okay, we got a higher high, higher low. We test that insufficiency on the 1 hour and then create a new higher high. Now when we're diving into the 15-minute, of course those imbalances are not so visible. There's a lot more noise and data in here. And I want to bring your attention over to the open, because I personally don't really trade any other times than the open. Okay, so the opening price is right here. Okay, and me personally, I really liked how we were coming down into this area, and I know that it's very hard to see, but you guys can see that there's a gap right there. Okay, not just that, but we also have this breaker candle here. Okay, this is the candle that pushed down, created a new high, pushed down, created a new low, tested that previous area of support, and then when we took out this high, the moment we took out this high right here, that moment, the very moment we take out this high here, I was looking at this breaker and that small gap there. Okay, so once we came into that previous area of support, okay, it was all about identifying our range. Okay, comes in there, sweeps internal liquidity, and we're gonna dive a little bit past this 5-minute, but most people would not really look any further. Okay, but when we get so close to the open, I like to look at my 5-minute range. Despite any breaks of structure, despite anything, I like to look at the range and identify insufficiencies. Okay, and see here we had this imbalance here on the 5-minute. Okay, and so once we trade through that 5-minute insufficiency, okay, what that's telling me is that we have found balanced price action. All right, so once we find balanced price action, I don't anticipate us to really come back into this area, right? And that becomes my new level of support. So I'm just nailing down from time frame to time frame where my areas of support are, right? And so here you guys can see we have this imbalance. We come back into it, okay, and then we get the nice open, and then of course we leave that whole imbalance behind. So personally, I don't believe I did participate on NAS. I didn't really look at Dow on Monday, but this was beautiful price action. If you got in right before the open, that's also cool. Personally would have not been able to participate, but I do like how we went long out of that 1 hour imbalance. Okay, I do like how we went long out of that 1 hour imbalance and ended up targeting previous daily high. Okay, previous daily high did get achieved within the same day. And then we dive into Tuesday's CPI price action. Now, remember our targets to the upside? CPI takes all those highs, that rejection block and that previous high as well, and we find this level of resistance up there. So CPI was the one that wrecked me. But again, if you haven't seen the video, I highly recommend to go check out my slippage video. I'll put a nice card right there, so that way you guys can, a link right here above, so that way you guys can check it out. And so just going back to the 1 hour. Okay, cool. We taken major liquidity to the upside. Okay, have taken major liquidity to the upside. We have this accumulation in previous areas of accumulation. We have all of this imbalance here. So personally, what I like to look at is insufficiencies. Okay, and target previous areas of accumulation. Why? Because this is in a previous area of accumulation that was never rebalanced, right? And so before we can look at previous daily lows, you can, which I love doing, right? Don't get me wrong, this is an Asian low and a previous daily low. Okay, but before looking at that previous daily low, before getting there, you got to look at your range. That's my low to my high. So the highs took all the upside liquidity, and so we still had all this downside liquidity left. Okay, but before we even get to that downside liquidity, we have this insufficiency. So for me, it's like I like to go for lowest hanging fruit. Okay, then of course we get a nice reaction out of CPI, really strong reaction, okay, that you guys can see here. And right here on the 15-minute, when we got closer to the opening price, the New York Stock Exchange opening price, okay, you guys can see here. You guys can see here, we have a nice break of structure to the downside, okay, a nice push lower, and then the opening price came right into our area, right into our area. So previous area of accumulation, liquidity sweep, we took out Asian low, so we can at least look for some potential accumulations in those areas to that high that took out the liquidity. Now, if you're not a person that likes to hedge the market, I totally understand. I personally don't like to hedge the market either. I wasn't really looking for longs after this took place. What really got my attention is more shorts, and the shorts were actually pretty choppy. And when news hits this way, I've noticed that CPI price action tends to range. Okay, so I wasn't a huge fan of continuing to play the rest of this price action, especially after what had happened. But if I was actively trading, okay, I would have been looking in this previous area of distribution here. Okay, and when we tap into those areas, I don't really care how many times an area gets played. What really matters to me is whether we come back or whether we mitigate. It doesn't matter to me if it's fully mitigated, not. I believe that we can play these areas multiple times, that they're there for a reason. And as you guys can see here, we have an imbalance as well. So we come back to that same imbalance. Now, even dismissing the order block, like we come back to that same imbalance, the news pricing, and continue to redistribute. Okay. Now here's where I personally would not have participated. There's not much of a price action that I really like. What I do like though is the fact that we create this high, we create this low, and once we take out that low, And only once we take out that low does my attention come to an imbalance, which we never came back to, right? So really choppy price action, but targets overall, the highs were taken out. So looking for more longs just didn't make sense. We took out so much major upside liquidity. What really makes sense is for us to really start diving into the lower ends and discount and start looking for discount liquidity targets, right? And so we start really pushing down. The whole day was really choppy. Okay, so I want to just bring your attention to what I was personally looking at. And so let's go to Wednesday. And I'm not gonna lie, on Wednesday I didn't really trade. There wasn't much that really caught my attention, but let's just review it together regardless. Okay, yeah, see, this is where I personally sit on my hands. Okay, when we fail to take out liquidity, what I'd be looking for is more shorts, right? Because liquidity to me is the name of the game. And so when we're ranging like this is where a prime example of when I don't trade. This is where these type of days are the days that you'll see me just sitting on my hands waiting for price action to do its thing. And so we'll skip Wednesday's price action that compressed inside this CPI range, and we'll move over to Thursday by the time we got back into trading. Okay, so notice Thursday by the open we had moved all the way down to that previous daily low. Okay, so let's bring our attention over to that previous daily low. Once we take out that previous daily low, what I really want to see is coming back into premium. Now our whole range is going to be from that day's high to that day's low, to that initial daily low. Okay, and you're gonna again see me mark out these gaps. Gaps are just like imbalances. They are look at it as like a magnet for price to come back into. Okay, just like opening day gaps like this one right here. Notice this, which I think is beautiful. This gap here at the opening price, if you drag it across Wednesday's opening price from that high to that low, you can see how those gaps basically line up together and how price action does indeed come back to it. So I want you guys to get in the habit of marking out these gaps within your range, and even if we traded through them multiple times, you guys can see that they can still be used to line up for confluence and multiple areas of liquidity. Okay, so now looking at those gaps 50% or above, this whole imbalance, for me it was mainly this opening imbalance here, or 50%, that really got my attention. Okay, and when we were sweeping that previous daily low / Asian low, okay, once we swept that major liquidity level, I had a feeling that we were going to turn this market around and get back into premium. Why? Because I like to identify high liquidity levels. Okay, liquidity levels that have the potential to turn the market around, and it doesn't have to reverse. That's the thing. It's like the market does not have to reverse for you to be profitable. Okay, as long as you have a good strategy, you're in and out. Okay, to me the most important thing above anything else is an exit strategy. If you don't have an exit strategy and all you do is focus on entries, I promise you, you're gonna get super hurt by the market. The market's gonna smack you around. Okay, so going into the 1 minute, once we dove in here, I was only looking at price action 9:30 a.m. and after. Okay, we see that we come down, create a new high, break structure here. Okay, and so this candle right here is a breaker. Why? Because it broke structure. So my attention was there. Okay, now there's no imbalances, so I don't really like not entering in without imbalances unless I have a really strong conviction, which on this morning I really didn't want a 1 minute to really make the whole, like my whole entire buy setup, right? Like the 1 minute shouldn't define your whole day. And so I was looking for a little bit higher price action or some level of insufficiency. Okay, so after we get a new high, higher low, higher high, we get what? A nice imbalance. Okay, these areas were shared live with our team. And you can leave it, your stop loss at that low. That previous area below that previous area of support, because that's still your breaker and we can come down lower into it. So I'm putting my stop loss below that low, and of course targeting at least 50%, right? Or previous areas of distribution like this one over here. Okay, but mainly understanding that a major sweep of liquidity can send us back into premium, from discount back into premium. And so my main objective would have been 50% or a target 50% and above, like those imbalances over there. But nothing wrong with taking partials along the way, right? So now I know that's a beautiful entry, but there was multiple areas in which you could have entered. If you missed that first one, we get a new higher high. Then you see another imbalance here. Okay, and so you guys can see like multiple times the same thing taking place. Okay, now if I'm buying, I want to be pretty deep in discount. Not always will I be like at the very bottom, which is fine, guys. Honestly, it's not the end of the world if you don't end up at the very bottom. If you catch the second entry, it's still a really good entry, still a great risk to reward. And so let's keep going with this, all right? It's going back to this 5 minute. Okay, I want to bring your attention over to this 5 minute imbalance here. That was also our 1 minute. Okay, and going back to that 1 minute price action. Imbalances can be played multiple times and in multiple different forms. I'm going to go over one today. The only way that I really want to release more and more content is if this channel continues to grow. I'm testing this out because honestly I've never done anything like this, and so to me this is very valuable. It's priceless information, and second, it's not really mine, right? It's like I'm just passing on information from previous individuals and past experiences. And so what I will ask everyone to do is, if you haven't already subscribed, hit the subscribe button. It would really, really help the channel. And as well as if you found any value in any of the videos, any of them, please share any of these videos or whatever video you'd like with at least one person, that it may help them improve in their trading, improve in their psychology, improve in their life. Okay, so now going along from these areas, targeting these previous areas of distribution, I want you guys to notice something. We're still not in premium. Okay, we're still trading below. So once we got a trade above this area, notice, just drag it out in time, we get a new higher high, higher low, and notice where we come back down to. Okay, from premium back to discount, back into premium. Okay, and notice this beautiful price action that takes place. Now we have a nice breaker here, right? Because this is the one that swept the low right here. Swept that low right there. right, and created a new high. So then you have this breaker here, and we can drag that out in time until we reach our gaps in premium price action. Okay, after we reach premium price action, I want to bring your attention over to what Dow Jones was doing here. Not always do you have to be in the smaller time frames to be profitable. Sometimes being in this time frame alone is more than enough. And so here's a great tip that I wish I knew when I was first getting started. If it's clear enough on the bigger time frames, on a larger time frame, doesn't matter what time frame it is, but if it's clear enough to take an execution on a 5-minute, 15-minute, 1 hour, 4 hour, then do so. You don't have to go any deeper, right? I think that if all your confirmations are present, then you have a great edge, and you have been presented with the opportunity of execution. After we tap into this gap, also an order block, we get a nice push lower and an insufficiency created. Okay, inside this imbalance, you could have gone short, right? And honestly, I'm not going to really go too much in depth with that one. As you guys can see, we fell super hard. This is the afternoon session right here. Takes out previous high there and then just dumps. Falls to a new low and returns right back to that area, right? Notice when we tap back into that area, this is the only bullish candle. We got a nice reaction out of that area. Within this whole range, it's only the one that tapped into our imbalance and the one that tapped into support. Notice, tapped into resistance, the only bullish candle, tapped into support, the only bullish candle within this whole bearish range. Okay, so now going into today's price action. Okay, we had a nice sell-off yesterday. Okay, nice sell-off, and notice that as well when we came back into that gap, the 4 hour was also something we came back to, right? It wasn't just that gap on the, I believe, the 5-minute and 15-minute. Okay, it wasn't just that gap, it was also the opening of that 4 hour imbalance that was just created. Okay, so lots and lots of confluence in that area. I'll let you guys back test that yourselves. And so now we get a new lower low. We come into today's price action, and today's price action came into this previous weekly low. Boom. We take out that previous weekly low. And so when we take out a previous weekly low, for me, that is a strong level of support. Doesn't matter if we're bullish or bearish. If we come through a previous weekly or previous weekly high or low, you're going to get some level of reaction out of those areas. Not always, but the likelihood is very, very high. Okay. We come into that area, and again, I'm not trading at London. I'm not trading any other time than just after the New York Stock Exchange open, which is at 9:30. Okay. So you guys can see Dow Jones here had, by the open, had created a new higher high. This is the whole reason I was bullish. Okay. And notice this previous low here, previous 1 hour low. Okay, I know that you guys have heard me talk about intraday liquidity. There's 4 types of liquidity. If you guys haven't seen that video yet, I highly suggest it. It is in the playlist. Liquidity is the name of the game. Guys, there's so much valuable content on there. Okay, one of the liquidity levels is an intraday one, which is, there's 2 intraday liquidity levels. It is Asian high and low and previous 1 hour highs and lows. Okay, so right before the open, I usually like to look for Asian highs and lows or previous 1 hour highs and lows. If I'm accumulating, I want to sweep that previous hourly low before I accumulate out of it. Okay, so dropping it down to the 15 minute. Okay, you guys can see what was the candle that swept liquidity right here, that order block. Drag that across. Okay, you guys can see we were getting some nice push to the upside. All right, and right around the open, okay, right at the open, actually, we get a nice push down. We get a really strong push down, and this is where the first tap into this area was where I personally bought. Okay, notice there's no insufficiencies, there's nothing that was really lining up other than there's just that order block and a major sweep of liquidity. But what is the difference between that 1 minute versus this one? That this is a whole 1 hour accumulation. It's not just a 1 minute against every other time frame. It's a whole 1 hour accumulation below a weekly low. Okay, below our previous weekly low. All right, so we come in here. This is, in essence, this is called our internal liquidity. Okay, again, liquidity is the name of the game. We'll give you all the sauce. I highly suggest you revisit that, and I'll put a link right up here in the top right corner so you guys can revisit and have quick access to that. Okay, we have this sweep of liquidity, sweep of internal liquidity. This is where me personally, I went long here. Okay, with my stop loss below these previous lows here, I wasn't, and you can play it however you want. You could have played it below this low, with the understanding, okay, that we would honestly, me personally, I was only targeting opening price in Asian high. Okay, so Asian high is right there. Then you have the opening price here, that opening gap. Okay, and if you notice here on the 1 hour as well, you have this imbalance here. Okay, and I forgot to mark it out before we kept going, so I'm going to mark them out right now with you guys. I see all of these things before they play out. I see these things, so sometimes when you guys see me mark these out, just know that mentally, like, I have all of these targets already predetermined. That's why I will get better as a teacher and as a coach to point these things out while I'm breaking down the chart. And I just forget subconsciously that I see these things without having to mark them up. And so I just want you guys to know that as we move forward, I will get better at pointing out targets prior to we get down to the entries. But I can't express enough how important targets are and how much more important they are from entries. Okay, and so going back down to that 15 minute, to all those gaps here. Okay, we got that 1 hour imbalance, 15 minute gap, and Asian high. And we could have gone a lot lower, but personally I was only looking about 50% of that. I didn't want to go any lower than that sweep of liquidity. And as you guys can see here, we tap into that area, and our first target is a good 1 to 3. Second target is a nice 1 to 4.5, and then final target is that Asian high. Okay, and I want to show you guys, this is literally how I played it. And I'll show you guys here on the 30-second time frame. Okay, we're going to take some of this and clean it up. Okay, and you guys can see here on the 30-second time frame, we accumulated, and overall we respected this whole down push that came into that area and kept reaccumulating. Now what I'm going to show you guys is that in the futures market, you are able to, there's prop firms and then there's brokers that allow you to trade right off TradingView. I can't legally state that this is a live account, so that's really going to be that's really going to be up to you guys. I'm going to leave it up to you, the student, whether you want to assume that this is demo, whether you guys want to assume that this is live. Okay, here are my executions for the day. Okay, this is the whole trade setup. As you guys can see, prior to the market, I was scalping it, and it's mainly because this is my first day trading Dow Jones in the futures market. My very first day trading Dow Jones in the futures market, right? And I'm gonna be fully transparent with you guys. You guys can see all my executions. So I was scalping to get a feel of what the lot size, or not lot sizes, it's not lot sizes anymore, it's contract sizes. Wanted to see how the contract sizes were, so I was scalping the market here initially, getting in and out, right? And then once I realized how the market was, I was pretty ready for the market open. And as you guys can see here, this is my execution here. It was an initial 5 contracts that I took all the way to, and I don't know where that guy is. When we first touched that imbalance, I took that. I took partials, and so this is that second closure, and I didn't close the entirety of it. I wanted to see if this area would just continue and hold, and as we came into this imbalance here and closed below it, I closed up a little bit more. And once we came into this imbalance and closed below it, I closed a little bit more. Why? Because I'm expecting these imbalances to hold price. So if price isn't holding, then I'm looking to close these out. So once you guys can see where exactly, once I hover over it, check it out on the screen. I'll highlight it as well. I know it's pretty small. You guys can see where I actually got out on those candles. See, once we close below it, I closed, and you guys can see right below it where I actually closed and sold back contracts. I sold back another contract here. Okay, and just to mitigate my risk, I was holding just one contract there, and over here, once we exploded to the upside, I added on, you guys can see here, I added on just 3 contracts, went very light. Why? Because my stop loss was pretty big. Okay, it was below this low here. Okay, I wanted this low to be respected, and so I added 3 contracts, and if we got back below this low, which is internal liquidity 50% and below, your internal liquidity level. And so once we came below that internal liquidity level, basically back to entry, I added on 3 more contracts. And once we tapped into that a little bit deeper, I added on my final 4 contracts. So at this point, I have 10 contracts open. Okay. And as price action explodes and expands to the upside, I'm over here looking at insufficiencies there. And one thing I would say, don't be afraid to get back in. I didn't get back in. I thought 10 contracts was enough, but notice every insufficiency before we ran the highs came back, got tested. Here's my second exit. Okay, I sold 6 contracts. I closed 60% of my position, and then right here I closed another 3 once we came back into this imbalance and took out that high. Okay, so at this point I'm 90% out of the trade, and you guys can see here, this was my final area when we came in there, ended up closing right there. And I didn't take it all the way to the Asian high, and the reason was because I was about, I think it was like 8-9% in profit. And so for a first day, I felt really good. This was my first experience in the futures market. My target did get hit, and I love to see that. I love to see my targets get hit. regardless whether I'm in it or not. I just this is the way that I ended up playing price action. This is how I executed. I'm adding full transparency with you guys because I want you guys to know that I'm not perfect. I'm not a robot, and I do make a lot of mistakes. I don't, sometimes even myself, even though I wanted the Asian high, I don't follow through all the way, right? I'm learning as I go with you guys, and I just want you guys to know I appreciate everyone on here, hopping on week after week, video after video, and I just want to say you guys are killing it. I know that I may not be working with all of you one-on-one, but I just want you guys to know the following, that if you haven't heard this already, I'm super proud of you. All of you. I'm proud of everyone that's on this channel for pushing yourselves to be better, for pushing yourselves to grow. And yeah, I just want to say, if you haven't dabbled into the futures market, this is a cool invitation. Diversify your portfolio. You don't have to only just focus on one thing, but allow that one thing to feed other investments, right? You don't always have to do that one thing alone. But yeah, guys, with that comes to the end of this video. I appreciate you guys for tuning in. I know it's a little bit of a longer video, but there's a lot to squeeze in here. Trade responsibly, okay? If you guys have any questions, there's a link in the description where you guys can reach out to me directly to my DMs. Promise you, it's me. I run all my accounts. And yeah, guys, take care. Much love, and continue to be amazing. Peace.